So let's talk about the long side. Now, the first thing is that really there's no change to our strategy as far as the long side. The only thing that we're adding into the mix is that we are preparing for a period where the market may digest gains or maybe even have a slight pullback, maybe some back and forth, but it's not going to stop us from forming a watch list A. So the first thing is that I can actually form a watch list A with a lot of, good looking charts if I wanted to. So that's the thing. When you have a watch list A and you have low risk entries possible or danger zones that are holding in many trades, then you have a watch list A. So as long as that's the case, understand that, form the watch list A, but what you want to understand is be sure that you just add any kind of new information into the mix. And that's where what we just discussed in the weekend review is prepare for a period where the market may pull back slightly or may give us a period of just digesting its move. So there are low risk entries out there. There are stocks that we want to watch. And I don't think that's going to stop us as far as the long side. So everything remains intact with the long side. What we discussed last weekend as far as two sides of the market, that is still the case. Don't mix those two sides of the market. You've got your trending stocks that are easy to hold and maybe in the midst of trends with some drama here and there. What I'm talking about is a pullback here, a pullback there, a digestion here, a pop there. I mean, that's how the market works. During a broad trend, you've got all kinds of pullbacks and down weeks and up weeks and sharp up weeks and sharp down weeks. There's all kinds of back and forth. Those kind of stocks like Lyft here, okay, or maybe like Tesla or Shop or whatever else, that's one side of the market. But don't mix them, don't commingle them with these kinds of trades. These kinds of trades, make sure you still focus on time duration. I don't think that we should ignore American Airlines because it is just right at not only the high volume close, but you've also got, I think it traded 2 cents above the high volume close, but you also got the 12-month exponential moving average ahead. So there's still a lot of potential in these airline stocks and beaten down stocks and all the other, list of stocks that I consider gambling stocks at the moment. But make sure you implement time duration, okay? So the long side, that's the story with the long side. Here's the new thing that we want to talk about. Something that we want to be aware of for the short side, or just to stay cautious. We need to be aware where things are. First of all, you've got the Nasdaq ran into the 10,000 level. That's an issue. That's one thing. You've got the breakout level that it moved above, became obvious, and I don't like anything that's obvious that quickly fails. That's a sign of potential reel and bait, and I highlight the word potential, okay? If there was much more damage in the market with growth names, I would be much more bearish than I am. But here's the thing: we need this level to be recovered sooner or later. If the market continues to stay below this level and stocks rally, I don't think we're going to see danger zones holding or growing. They're going to start to falter. So this is a big thing. So keep in mind that yes, the Nasdaq is still in character change. It's still holding its 20-day. It gave a test of this level and it's held it so far. That could fail. So two of the things we want to pay attention to is character change failing. That could be a sign of a pullback or a correction, and we want to be aware of where does the market go as far as the recovery of this breakout level. This is an obvious level, okay? That's one obvious level. The next obvious level is in the S&P, which is this 3,000 level. Quickly ran above it, velocity picked up a bit, and then boom, it hit it, undercut it. Now it's just sitting there. So character change is still holding in this one, but this one is far off from its breakout level. So the main thing to focus on really as far as the short side and being the a cautious speculator is just understanding the Nasdaq. These levels have predictability. Historically, they have proven themselves to be reliable as far as sell signals and understanding reel and bait. So just understand that any kind of aggression on the long side, if you want to start to get crazy in buying up stocks, we need to eventually see the Nasdaq trade above this breakout level. It doesn't need to be all out above 1,000 and beyond. It just needs to be above the breakout level. It looks like it's going to be recovering it. That along with if that's the case, we're going to start to see these bigger stocks that are actually going to be moving above those key levels as well, like Microsoft and the others that we talked about. So that's the main focus. We got a new element this weekend to add to our strategy, which is pretty much a bit of caution. So be aware of the Nasdaq, be aware of that breakout level. It is important to pay attention to. So let's just talk about Tesla's chart. Quite a few things to break down there, and then let's get to the watch list day.